Oh yes, we know that it's impossible to accurately predict the future, especially when it comes to crypto's performance. Over the years, volatility has been a sworn enemy of crypto, and anytime it shows its ugly head, crypto investors have their heads handed over to them. However, is there anything that can suggest Cardano's performance in 2025? There should be. In a recent tweet, Michael J. Kramer, a market strategist, expressed concerns over Bitcoin's possible price breakdown. He underscored Bitcoin as a major leading indicator for risk assets in general and predicted a potential slide below the $20,000 mark, which he believes would carry negative implications for the stock market. According to CoinGecko data, the flagship cryptocurrency is currently trading at $26,000. This is a stark 61% drop from its all-time high reached over a year ago in November of 2021. A few days ago, Bitcoin was grappling to go past the $27 level. In light of these new developments, Kramer's forecast for a significant breakdown appears more certain. The tremors in the Bitcoin market might have collided with the dovish comments from the US Federal Reserve Chair Jerome Powell. Powell hinted at the possibility of a central bank easing up on its series of rate hikes due to the troubles within the banking sector. What an incredible collision. Such an environment of relaxed monetary policy and low interest rates have historically been favorable for risk assets of the likes of Bitcoin. However, the current trend suggests an apparent deviation from this norm. The connections between Bitcoin's health and the performance of risk assets underscores the relationship between cryptocurrency and traditional markets. This chart, shared by Kramer, spells an uncertain future not only for Bitcoin, but also for the risk asset that its performance could potentially impact. Perhaps this time, meme coins could be preserved, or what do you think? Recently, Pepe, the frog-themed meme cryptocurrency, has seen a 12% surge in what seems to be an indication of newly found momentum. The meme coin has managed to outpace BNB's 24-hour trading volume. Its market cap currently stands at $720 million, which is a far cry from the $1.8 billion milestone. The meme coin is down more than 60% from its all-time high of 431 millionths of a penny, which was recorded on May 5th. Despite the significant correction, Pepe has established its dominance in the world of cryptocurrencies, rapidly transforming into the new viral meme coin. Pepe is everywhere. Pepe's rise in the crypto market has been nothing short of extraordinary. According to data from Asari, the number of recorded blockchain holders surpassed 100,000 in just 22 days after its launch. This growth surpassed that of other meme coins such as Shiba Inu. Pepe's strong presence in the market can be attributed to the adoption of the coin by major global exchanges. According to reports, Bittrex Global listed Pepe on its platform, which increased the coin's exposure in the market. In addition, other renowned exchanges, including Kraken and Binance, have listed the digital token. Nonetheless, a meme coin cannot just pop out from anywhere and displays Bitcoin's fundamentals or outpace Cardano ADA. Of course, the gains have been tremendous, but this is not the time to celebrate something as fragile as meme coins. We are talking about 2025, and according to history, meme coins do not sustain their mythical profits over the long haul. Recently, there have been significant upticks in the large transactions on the Cardano network, as the volume surged from approximately 700 billion to an impressive 180 billion ADA. This remarkable 100 billion ADA spike triggered curiosity about the reasons behind this sudden whale activity. One of the basic driving forces behind this surge could be the fundamental growth of the Cardano network. Over the past few months, Cardano has made significant strides in enhancing its platform, facilitating an environment conducive to the acceleration of large-scale transactions. Upgrades like the Alonzo hard fork, which introduced smart contract capability to the network in 2021, may have driven the adoption of Cardano among large-scale investors, influencing spikes in transactions. Plus, Cardano's growing ecosystem, characterized by a flurry of new releases and project launches, might be contributing to this surge. New dApps, NFT platforms, and DeFi projects being built on the Cardano blockchain present an opportunity for large investors. They might be accumulating ADA in anticipation of using or supporting these new projects, thus explaining the sudden increase in high-volume transactions. Furthermore, we could have more beautiful stories to tell about Cardano when the Bitcoin halving event hits the crypto market. Bitcoin halving is a seismic event in the cryptocurrency ecosystem that occurs once every 4 years. It's an automated process built into the Bitcoin's network code, which reduces the reward for mining new Bitcoin blocks by 50%. The influence of halving on market sentiment, miners' profitability, and innovation in crypto ecosystem has driven a surge in anticipation. With just a year left before the event, experts and investors in the crypto industry are closely monitoring its potential impact on the market. Bitcoin's halving profoundly affects market sentiment, creating a new supply shortage. This reduction in mining rewards will further limit the number of new Bitcoins entering the market, and this potentially drives up the price as demand grows amid decreasing supply. The reduced supply makes Bitcoin more valuable and attractive to investors, reinforcing a significant price surge. In the previous halvings, the price of Bitcoin significantly increased by more than 1,000% within a year after the event. This price increase attracts more investors and media attention, leading to increased adoption and awareness of cryptocurrencies. But the sad news is that the price surge is often followed by a significant correction as the market adjusts to the new supply-demand dynamics. The largest digital asset had climbed 67% since December 31st in a partial recovery from an epic rout in 2022. While the token is struggling below $30,000, the halving can trigger a further price incline. In anticipation of the halving event, different crypto analysts have presented their predictions. A Bloomberg intelligence analyst, Jamie Douglas Coutts, sees Bitcoin surpassing the $50,000 mark, he said. Bitcoin cycle bottomed around 12 to 18 months prior to the halving, and this cycle structure looks similar to past ones, albeit many things have changed. While the network is vastly stronger, Bitcoin has never endured a prolonged, severe economic contraction. Meanwhile, Marcus Thurlian, research head at Max Report, predicted that Bitcoin will reach around $65,000 by April 2024. This is more than double the current price. Other analysts have aired their views on the same concept. Some even gave a staggering price surge prediction following financial instability in America. Reddit users have also presented their opinions on one of the popular channels known as Our Cryptocurrency. The aim is to understand the Redditors' perception of the anticipated price range, allegedly taking Bitcoin to over $50,000. One of the users perceives the stated value as a realistic outcome. This is, for me, the most realistic outcome. Even though we can't predict anything for sure, since the past years were quite insane, when you zoom out on the graphs, you can clearly see we're not anywhere near a breakout. Another user took a different perspective to answer the question. If you take a glance at history, we should expect to crab with pumps and corrections the rest of 2023, well into 2024, past the halving. The bull cycle should return in late 2024 and into 2025, and profits can be taken near the trail end of 2025. The same user added, "We had never had crypto through a recession, historical inflation, wars, anti-crypto regulation. So this time may be different, and a blow off top may be off the table. In any case, we are still in the accumulation fire sale zone right now." So we ask, is Cardano prepared for the bull run that will be triggered by the Bitcoin halving event? And the signs should be evident about now. ADA Whale, a Cardano community-focused Twitter account, believes in the potential of bull runs for Cardano. On Twitter, they mention that every bull run begins with a narrative, citing that Shelley's staking narrative paved the way for the last bull run for Cardano. ADA Whale believes that the next Cardano bull run might be fueled by increasing DeFi TVL. As TVL increases, the narrative will feed on itself. They continue, and the bull run will begin from there. Every bull run starts with a narrative. The last one for Cardano was Shelley and staking. The next one will probably be TVL or a more spectacular event. However, according to ADA Whale, the bull run is not something expected anytime soon, not even in 2023. In the Whale's judgment, the expectation was just not a 2023 story. They suggest that patience might be needed. And as reported, crypto venture capital founder Dan Garmendello stated that the growth in total value locked on Cardano will be the most obvious leading indicator of the incoming ADA price increase. Our eyes should be on the price charts and the incoming developments in Cardano. But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.